In this video, we will show you a remarkable winning trade taken using order flow and volume profile trading concepts. The previous day value area and volume point of control. If you draw the volume profile, we are in the 5-minute chart. In the 1-minute chart, these bubbles are the big trades made by big players, smart money, banks, institutional traders. The price strongly pushed down from there and making red bubbles, which means aggressive buyers were absorbed by passive sellers. The delta is negative, which means it has selling pressure. Cumulative volume delta, CVD, is going down. Zoom this 5-minute chart and go into the footprint chart. If you look over here, which means aggressive sellers continuously push the price down. That is why we took our sell entry in this area due to this sell side stacked imbalance and due to the failed buy side stacked imbalance. The remarkable 1 to 3.25 risk to reward trade. So we are in the micro mini Nasdaq index futures 30 minutes chart. So this is a remarkable trade we have taken based on order flow and volume profile trading concepts. So if you look at this 30 minutes chart, you can see the price has pushed one leg up. And now in this area, the price is in a range. So now let's look what is the bias for this trade. Is it bullish or bearish? To determine that, what you have to look is the previous day. If you look at the daily volume profile for the previous day, you can see the volume point of control is here and the value area is over here. And today the price is above over here, and you can see the price pushed one leg down here strongly. So there's a possibility where the price might come and reach the previous day value area and volume point of control. Also, you can see the price is above the weekly VWAP level. So there's a chance where the price could come down and the weekly VWAP level acting as support. Also, you can see the red color line, the price is below the daily VWAP level. So considering these facts, there is a possibility where the price retracing towards the previous day value area and volume point of control. So because of that, on this day, our bias was bearish. So we are looking for bearish trade entries. Also, you can see in this price push up, if you draw the volume profile for that price push up, you can see in this area there's low volume node and there's low volume node. So there's a chance where the price could retrace towards these low volume nodes because they act as a magnet. So considering all these facts, for this day our bias is bearish. So now we are in the 5-minute chart and the time is 9:30 New York time. So what we are looking is, we can see a range build up over here. So if we draw the volume profile from this price point to this price point, this is the value area, this is the low of the value area low. So we put a horizontal line, the green color line, for the value area low, and because our bias is bearish, now what we are checking is if the price would push strongly down away from this range, from this value area. So if the price could push strongly down from this value area, and then what we are waiting is for a possible price retracement into this value area low for us to see if there is a possibility of taking a trade entry. So let's see what the price is doing now. So in the New York Open, the price is fluctuating. So now you can see the time is 9:45 AM New York time. So we usually wait for around 15 minutes after the market open to see the potential price fluctuation. We are in the 5-minute chart. We can see the price strongly push down away from this range. So now we are in the 1-minute chart. So what we see here is from that range, when the price pushed down, in the 1-minute chart, we can see the price retrace to the value area low, which we mentioned earlier. And you can see in that area, these bubbles are the big trades made by big players, smart money, banks, institutional traders. You can see this green bubble tried to push the price up. However, the price strongly pushed down from there and making red bubbles. which means here the buyers failed to take the price up and the aggressive buyers were absorbed by passive sellers. So which is a positive sign because we are looking for bearish entries, and then you can see strong price push down with red bubbles, meaning aggressive sellers winning the battle and pushing the price down. So here we got the price coming and tapping this level and going down, which is what we were looking for. And if you look at this level now, where it made this large red bubble, so this is where we are interested of going into a sell entry. And if you look at that area, this line what you see over here is the weekly volume profile value area high. So you can see that this line over here is the weekly volume profile value area high. And then this is the 30 minutes chart. You can see the strong price push down. So now we are back in the 1 minute chart. So with these confluences and with the bearish biasness, now what we are looking for is a potential entry be taken in this area. So if we are to take a trade over here, and then our stop loss will be above the candle which made this green bubble. However, you can see if we are to place this trade, our risk to reward ratio for the first take profit is not even 1:1 if we are to place a trade over here. So because of that, we have moved our entry into this area where we get at least a 1:1 first partial take profit. If you would like to learn the trading strategies we use, click the link given in the description below to access the full free course and use that knowledge to get funded and start trading like a professional. Also, if you look at this red bubble, you can see the delta is negative, which means it has selling pressure. And also you can see the cumulative volume delta CVD is also going down, which is also a positive sign for a sell entry. And also you can see when the price came down in this area, it had made high volume as well. So these are extra positive confluences for us to take a sell entry. So now I'm in the 5 minutes chart, and also if you zoom this 5 minutes chart and go into the footprint chart, you could see in this price push down in this candle, there is negative delta being printed. So that is also a confluence for us to take a sell entry, which means aggressive sellers are found in this area. So if the price retraces, there's a possibility where these aggressive sellers will act as resistance and defend their sell entries because they don't want to go into a drawdown. So the footprint chart also confirms us that it is a potential area for a sell entry. So now let's see what the price is doing. So you can see the price came and tagged this area. However, we will still not take a sell entry because we still would like to see if the sellers are willing to defend this price area. So you can see still the sellers are not defending this area. So we want to see big trades appearing in this area with large red bubbles. So until that, we will not enter into a trade because we need that extra confirmation. So you can see now the price came back and again tapped that value area low, and price is reacting to that area. So once we see this price push down coming all the way over here, and when the price started to retrace, because the value area low defended this area and price strongly pushed down, so we enter into our trade over here. So the reason for us entering the trade is this price push down with big trades and this area being defended by sellers and the price pushing down. So we enter into our sell entry with the first take profit target of 1:1. Let's see what the price is doing next. You can see the price is in a range in this area. After hitting our sell entry, you can see now the price came and hit our first take profit for a 1:1 risk to reward. And now let's keep the trade running with partial profits. So we are keeping the trade run with partial profits, and you can see the price is reacting to the monthly volume profile value area high over here. So we keep an eye on that as well. So now you can see price strongly break down this area and price strongly push down, and you can see the cumulative volume delta CVD value is also making lower lows. So the CVD supports our bearish biasness, making lower lows and lower highs. So the price is following the cumulative volume data. And also you can see when the price pushed down, the delta is negative, which means aggressive sellers. So the delta and the cumulative delta shows us that aggressive sellers are active and pushing the price down. So when the price make this push down, what we do is we bring our stop loss into break even, so that now we are on a risk-free trade which is already on profit. So the stop loss will be moved into the entry location, and then we will keep the trade running with partial profits. So you can see the price is pushing down, and this yellow line over here is the weekly volume profile point of control. So it's possible that the price might come here and make a reaction, and where this weekly volume profile point of control can act as support. So there's a chance where the price can halt in this area. Also, looking at the 30 minutes chart, you can see the price is strongly pushing down towards these low volume areas, which could act as a magnet to attract the price. And also the price is reaching towards the weekly VWAP level as well. So if you look at the big trade values, you can see the red bubbles are, which means the aggressive sellers are strongly pushing the price down. So it's extra confirmation for us to hold the trade for further price run down. So let's see what the price is doing next. So when we see this blue candle popping up over here, and also when we see an aggressive seller, this red bubble, the big trade, aggressive seller trying to push the price down, but price was unable to go down and made a wick and price strongly push up. So this is where we will take our next take profit for a remarkable 1 to 2.65 risk to reward. And also because the price is more closer to the weekly volume profile point of control, so we'll be exiting our trade fully in this area, because we also can see the cumulative volume delta CVD also starting to make a range without moving down, and the buyers being printed in the CVD, so which gives us an idea where now the price could retrace back. So we will let the remaining part of our trade to run until the price comes and hit the weekly volume profile point of control. And when we see this reaction, and when we see the delta being a green delta being printed, and when we see the cumulative volume delta also printing bullish candle, this is where we will fully exit our trade for a remarkable 1 to 3.25 risk to reward trade. Also, if you look at the 5-minute chart, and if you look at the stacked imbalance, you can see over here there is buy side stacked imbalance, but the buyers were unable to push the price up. So which means passive sellers are acting as a wall over here, and that's another reason why we place our stop loss above this buy side stacked imbalance. And also when the price move down, we can see sell side stacked imbalance and buy side stacked imbalance. However, you can see in this area where we took the trade, there is sell side stacked imbalance, which means if you look over here, which means if I zoom it over here, which means aggressive sellers continuously push the price down in this area, and that is why we took our sell entry in this area as well, due to this sell side stacked imbalance and due to the failed buy side stacked imbalance. So this was a remarkable 1 to 3.25 risk to reward trade based on order flow and volume profile trading concepts. So hope this was a very insightful trading recap for you all, and we will see you soon in another video. If you would like to learn the trading strategies we use, click the link given in the description below to access the full free course and use that knowledge to get funded and start trading like a professional. Okay, so it's end of the video, and we will see you in another video.